Hello and welcome to this second edition of Tuscaloosa is Talking with Philip Coleman. And today we're talking taxes. And our guest today is the right person to discuss all things taxes. Ms. Eva Owens is a professional tax preparer and a professional tax consultant and has been for years with H&R Block. Ms. Owens, thank you so very much for joining us today at the very height of tax season with that April 15th deadline looming just ahead.
And thanks for having me.
And speaking of that April 15th deadline, which is now just mere days away, tell us why is it so very important that we taxpayers meet that April 15th deadline and not let it pass by with us not filing a return if we are required to do so?
All of us must file that tax. We should have our tax done by the end of the tax season. If not, then you'll more than likely get a letter from IRS wondering why you hadn't done that. But you don't want that to happen because IRS have all the information that they're looking for you to present to them. And it all depends on how much, if you're owing them, how much it would be for you missing that deadline. Now, also, April 15th is the deadline, but you can get an extension if you just can't get your information ready to send to IRS. So that extension will come several months later. But the main thing is you have 4 months to get that information and get your tax filed before April 15th.
All right, very good point there indeed. And tell us now who exactly should file? Who is required to actually file a tax return? I know that it's based on income, that you have to earn a certain level of income before you are required to file a federal or state return. Tell us more about exactly who must file a tax return, federal or state.
Yes, that is correct. And really, what I suggest, as a result from a few months back, from a few years back, go ahead and file that tax return, whether you're required to file it or not. Now, if your income is less than your standard deduction, then you don't have a reason to file unless you've had money withheld from your pay and you want to get that money back, and you can't get it back unless you file that tax return. And we have the single, and some people file head of household, some married filing jointly, some married filing separately, but and of course head of household. But each one of those categories have a certain amount of money that you can make without really being required to file. But I would suggest that you do file that, or that you talk to somebody who know about it, because you never know what's going to come up later on.
That's such a terrific point, Ms. Owens, because even if you fall below that threshold of income and you are not required to file a return, as you have just stated, you might want to go ahead and file a return anyway, even though you're not required to do so, because you may receive that tax withheld during the previous year back in the form of a refund, which, of course, as they say, is a good thing.
That's correct.
Now,
That
tell us about those individuals who, even though you may not actually be employed, you are still required to file a return. Even though you don't have a job, you're not working, but you still have to file a return because you do have income coming in the form of some type of maybe retirement benefit, a social security benefit. So even though you're not employed, you're not actually going to work every day, you still have to file a return. Tell us about those situations, please.
Yes, with the retirement system, with Social Security, yes, you need to you need to file your tax return. Um, on the federal, a lot of the retirement is taxable. Each state has its own bylaws, rules, how they should work with that. Now, the state of Alabama, where we're in, so many of the retirements are you are not required to file them with the state of Alabama, but you do need to file with federal. Now, and if you run into a problem with that, you can always check with the Alabama Department of Revenue that and get the answer that you need on that. If you're not sure that whether it's taxable or not. For example, a teacher's retirement of Alabama is not taxable to the state of Alabama, but it is taxable to the federal. And if there's a question, you know, all you have to do is go online and check and see what would be the best thing for you to do. Now, on Social Security, that is taxable to the federal, not to the state of Alabama, and it's taxable to the federal depending on your income, your filing status, etc. But so many people can't miss that because they think that they've already paid tax on that. They feel like they have, but they really haven't. So those are some of the things that even though you're not employed, you still have income that needs to be filed, and it's important that you file that tax for that year.
Another excellent point. So even though you're not working, you're not actively going out to a job every day, under some circumstances, the type of retirement benefit that you receive, including Social Security, may, under some circumstances, be taxable, and you still have to file a return.
Exactly, that's correct.
Let's talk about other forms of taxable income, such as tips, interest earned on the money you have in the bank. And if you play the stock market and receive a dividend based on your investments, tell us about other taxable income. Are tips taxable? Or is the interest that you earn on the money you have saved in a bank, is that taxable? And what about if you're someone who has money invested in the stock market and you earn a dividend, is something like that taxable also?
It is, and interest received from money that you have in savings is taxable. Dividends, ordinary is taxable, but sometimes that depends on how long you've had this particular thing that the dividends come in to you. On tips, this year is the first year we really don't for 2025. You're not required to file tax on your tips. And IRS has said too that overtime is not taxable. So no matter how much overtime you earn, then that's deducted from the amount of income. You do not have to pay tax on that. And you may get that in different forms because this is new, and some of the employers and the people who are working with them are not quite sure how that should be done. But it will be either in a letter form or it will be on your W-2. And those are the changes with that, with the overtime and with the tips.
Let's talk about those ways that we can lower the amount, reduce the amount we owe in taxes, such as deductions. Tell us about some of the deductions that we are allowed to claim based on our, individual circumstances, of course. But tell us about certain deductions that our viewers may qualify for, such as being able to claim dependents and perhaps charitable donations. But tell us about those deductions that we might qualify for that can help lower the amount we owe in taxes.
Okay. The dependents that you're claiming must live in the household with you for over half the year, and you must provide over half of their income. For head of household, is for example, the income is less than standard deduction, which is 32,676. Say if that income is less and you make less, you need to go ahead and file that tax return, especially if you've had if you had money withheld from that. And also, if your income is in a certain amount, then and you have children, then there's a taxes that you could receive because you're caring for the person who lives in your household. That is, sometimes you may have a problem with spouses who separated, and one person want to claim the child or the children, and sometimes that's decided during the court when they're making the final decisions about divorces. But if you do claim, if you do file it and you don't have that much income, it still will benefit you, because with the children under 17, you do have a child tax credit. And if there's somebody still in your household that's over the age, but you've taken care of them for the whole year, then there's a small amount that you can deduct from that also. So, and let's go to the itemized deduction. Itemized deductions like your medical expense, unless you have a lot of medical expense, you probably won't be able to claim that because you have to have a percentage of your adjusted gross. Now, on your taxes, real estate tax, that's a deductible amount. And that's the ad valorem tax on your vehicle tax, is a deductible amount. Oh, and then you'll move down to your contribution. Your contribution to your church or any charitable organization. Now, some of it is a percentage, but most of us is doing church. We're doing scholarships to other to help other people. Those items are deductible. And mortgage interest, if you have right now, since things have changed, you have to have quite a bit in order to outweigh your standard deduction. So, but I'll always try to go ahead and record those, because if it does not help on the federal, there's a possibility that will help on your state. Each one of your states have its own rules as far as this is concerned. But now more people are itemizing less than they were previously, because at one time there was other things that we could claim as deduction, but they narrowed that down some, and also it made the standard deduction a bit more. So those items are deductible. Oh, and I always say and try to remind my clients, when you taking these deductions, make sure make sure you have all your documents so you're able to prove what you're putting on your tax return.
Yeah, you anticipated my next question because I do recall from a previous conversation that you and I have had that if you are going to claim these deductions, the IRS wants proof,
They
solid proof that you are entitled to these deductions. For example, in the case of you you're claiming your child as a dependent, you must include your child's social security number on
Exactly.
your tax return as a way to prove you are
Mhm.
entitled to claim your child as a deduction. You have
Mhm.
to, under some circumstances, include your child's social security number on your tax return. And there are just other ways that you are required to prove you
Mhm.
are entitled to the deductions that you're trying to claim.
Exactly. That's 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 it. You need to have proof of anything that you record. You need to have that document there. So if IRS should ask you about it or want to see it, then there's no problem. You can go ahead and take care of that.
And I understand now health insurance is among those issues or matters that are expected to be addressed when you have your, especially your federal tax return filled out. You are expected to indicate whether or not you have some form of health insurance.
Yes. Now, health insurance, biggest problem now is the marketplace insurance. That's the marketplace is where when you don't have insurance, you really can't get any insurance. Then the marketplace is the best place to go to get that insurance. Now, what happened at the marketplace, you will estimate how much money you think you're going to make during the year. And then they will compute your taxes, not your taxes, your amount that you need to pay to take care of your health insurance for that year. And that's all right if you don't have anything else. But a lot of people don't understand if you say, I know that I'll make $30,000 this year, but you end up deciding to withdraw from your 401k or something else, and then that's going to make your income higher than you estimated it would be. So that means that you're going to, at the end of the year, you're going to either owe or there's a possibility that you can get a refund from that if you estimate not quite enough. But this one particular thing that IRS is looking for this year is the 1095A. The 1095A is from the marketplace. And if IRS get a return where you had marketplace insurance, the return will surely reject because that's really one of the things that they're looking for. And like I said, it's a good insurance if you don't have anything else, because this insurance calls you to really, and sometimes you don't know if you're gonna get more income that you put on the list that you will be making. So that will make a difference. But again, it's better if you don't have any insurance to get that. But you have to watch how you handle that.
Yeah, be very careful with that. Perhaps it's wise to have a professional taxpayer, a professional tax consultant like yourself to assist you with such a delicate matter as that health insurance issue as it pertains to income taxes.
That's exactly right.
Now, you mentioned that one word that makes this whole taxing situation somewhat tolerable for everybody, and that's that word refund. Let's talk about that briefly. If we are entitled to some sort of a refund, what do you recommend? Some of us like to go the old school way and receive a check in the mail like we did many years ago. And while others like to go the more modern route of having a direct deposit for our refund, which do you recommend is the most safe way to receive a refund and the most speedy way to receive a refund? Going the traditional check in the mail or going with direct deposit?
Direct deposit It's the best way to go. Now, uh, I was reading some information on one of the clients, and what IRS is trying to do is to get away from the paper. And in some situations, they charge $25 for a check. This year, the information from IRS is that if you want to receive a check, then you may receive it in 90 days or after 90 days. And in some of the IRS is sending letters to some of the people who wants checks and asking them to send their banking information so that they can get their refund. Now, and I'm thinking, and I know that they're trying to, get away from all the paper, but I'm thinking later on, it may even be where if you don't have an account, then that it may be that you will have to they will send a card. But right now they are just asking they are letting us know to let our clients know that it's better to have a direct deposit. I've always had forever and a day direct deposit because to me it's safer that way. And we also have if you're doing your own tax or if we're doing your tax, there's a space on that. If you owe the IRS, you can set it up where IRS will directly debit it from your account. Now that's okay, but I just never like to give mine that way. So if I had to pay, then I would send them a check. But for a refund, direct deposit is what I would use.
Ms. Owens, you did anticipate my next question because I was going to say on the flip side of the refund is what if we owe taxes? We have our tax return filled out and we find out that we actually owe money to the IRS or maybe in some cases owe money to the state. I
Hmm.
would assume it's best to pay as promptly as possible, and you recommend paying in the form of a check.
Hmm. That's what I recommend. But some people do want the state or whoever they owe to direct the debit it from their account. But if you owe IRS and you know you've gotten your tax done that you got to pay, you still need to go ahead and get that in before the deadline. Because if you don't, then that's when interest and penalty will set in. And then instead of your bill of your bill of what you owe is one thing, then well, I guess like most industries, it continues to grow. So it's best to take care of those situations. And the one of the first things though is it makes sure, and it's kind of hard to do, but I look at a W-2 and I see the income. I'm looking to see at least 10% withheld as federal income tax. And because 10% is the lowest bracket that you paying tax on. It may be 12, it may be 14, it may be 37, but if I don't see the 10%, then I think we need to talk about it and we need to go back to our office job and get it changed to keep us in line without having to have to owe. And of course, some people say, well, I can spend my money as well as the IRS. But the way our system is set up, then you should be paying or having money withheld. Uh, to me, that wouldn't be a choice. But some people do feel that, it's okay, I will pay it. But it should be paid before the deadline for each year.
All right, and Miss Owens, my lovely wife, Michelle, who serves as the producer of this program, just informed me we have 5 minutes left for our discussion. So, in that final 5 minutes, is there any particular tax matter or tax issue that you would like to share information about with our viewers before we conclude our discussion, with us having approximately about 5 minutes left?
I have a couple. One of them, I don't think we mentioned that $6,000 for seniors over 65. Uh, that's money that you're not coming in to get $6,000. That money that if you're over 65, that money is added to your standard deduction, which means that you have more that you can take away from your income and make it either your tax less or you get a refund back. So that's and then also with that 6,000 for each person. If you're married filing separately, that's one of the things that you can't do. You'll miss your $6,000. You'll miss not necessarily your 6,000, but the maximum amount is 6,000. It may be your income is not too much for the 6,000, so you may have four that's deducted. But that to me is a help for the people who are 65 or older. And I always like to remind my clients as they get ready to retire, do not take all of your money out at one time. You work the whole year, so you got a full year's pay. If you got something that 401k or some of the other retirement system through your job, then just wait until the next year. And the next year, you'll have just that retirement if you're going to draw that out instead of having the retirement plus everything that you made, which would put you in a much higher tax bracket than you would if you were not. So you could save money by doing it that way. And sometimes people will have it rolled over to another a bank, another something. That's good. But I just like to remind my clients as they get near the retirement age, then kind of look out for that.
Miss Owens, thank you so very much for sharing all that extremely important, vital information at this very appropriate time with that April 15th tax
Yes,
deadline being just mere days away.
yes.
Miss Eva Owens is our guest today. She is a professional tax preparer, a professional tax consultant with H&R Block, and we do appreciate her being with us today at the very height of tax season. As always, I thank my lovely wife, Michelle, as serving as producer of this program, handling all the technical aspects of it. And I also thank you, our viewers, for sharing your valuable time with us too and watching this program. And we hope to join you again in the coming days with another, what we hope will be a very important and beneficial topic for you. Again, thank you for being with us today for this program and enjoy the rest of your day.
And thank you, Mr. Coleman.